Hey, good evening, everyone. Happy New Year, and this is my first attempt in sharing my personal investment portfolio. And the purpose of this channel is to show you my investment journey as well as learn from this investment community. Um, on this first video, I would like to take you guys through my investment portfolio, and I use Robinhood for investments right now, and I've started investing into this portfolio from the February 2019, and so that's what you're seeing here is basically 2-3 years of investment, and I slowly dollar cost average into all of my stock investments and built the portfolio slowly. So we right now we're at 41,000, but when I started it was almost nothing, and I've been very methodically investing each and every week, little by little, and we are here at 41,000 for now. I would like to take this portfolio to 100,000 in the next at least 3 to 5 years. That's my goal. So to begin with, I would like to show you some of my investments. So I got a mixed investment into ETFs and stocks. I think about 7% of my investment is in ETF and the rest is all in stocks. Uh, One of my goals for this year is to kind of balance that, have a little more investments into ETF. Um, at least 20% is my goal for the ETFs and 80% on the stock. So to begin with, the first ETF that I've invested is the Vanguard Information Technology. So this is basically an ETF with all the technology company and some of the payments company too. It's not purely technology. So as you can see, there's about 6% of finance services into this fund. This is basically the fintech companies like MasterCard and Visa. And like I said, the majority is technology. So the top holdings for this fund is Apple, Microsoft, Nvidia, Adobe, Visa, and all these big names. So I got into this fund during 2020 COVID year, and it's given me really good returns so far. And the next one of my ETFs is the value investing, the Vanguard High Dividend Yield ETF. One of my favorite things is to collect dividends. So I tend to focus more on the dividend stocks than the growth stocks. But here lately, I've been trying to get into the growth stocks, at least the one that makes some investment sense. So I've been slowly diversifying into some of the growth stocks as well. But I would like to keep that at least 10 to 20% of my portfolio and have the majority in the dividend stocks. So this Vanguard High Dividend Yield ETF also I started investing around the peak of the COVID time, and I got really good returns on this. It's about 50%, even though it's a very small investment. The returns within 2 years is pretty good on this one. And I do drip investing on this, so any dividend that I get on from the Vanguard Dividend Yield ETF goes back into it, and it keeps multiplying. And then I've also got some real estate investments like WP Carey, Store Capital, and Digital Realty Trust. So these are all investments that I started during the peak of COVID time, and it's given me decent returns. I would say about 25% price appreciation, uh, not to mention the dividends that I've been getting from these companies as well. And then, as a big fan of Warren Buffett and value investing, I couldn't keep myself out of the Berkshire Hathaway stock when it was trading really low during the COVID times. So it went from 229 to almost 170, and I think my average cost for Berkshire is 208, and I got a real good appreciation since that, about 43%. I plan on holding this forever, and it gives me real pleasure to follow the company news and the every quarter when they release the investments summary for the Berkshire Hathaway, because I believe there's a lot to learn from Berkshire Hathaway in general when it comes to investing. And then the Stellus Capital Investment. This is a business reality, sorry, a business company. So this basically gives me a very high yield with a very less price appreciation. And the average yield right now is 8.29, but I think based on my average cost, my yield average is around 9.5 to 10%. So I've been using those dividends from this investment to invest into other stocks. And I think the good price point for this is around $9 to $10. So only when it drops below that, I'm going to invest more into the stock. And if not, I'll keep collecting the dividends from the stock and investing it into the other stocks. And as you can see, there's minimal price appreciation because a business like Stills Capital have to uh, uh, distribute their dividends about 90% of their income. Uh, and then I've got little investments into the technology companies. So these are companies that I'm considering as growth stocks as well. And you can see, like I was mentioning earlier, I've started getting my feet wet into these tech growth stocks. So I got a very few shares in Microsoft. And then Alibaba is one of my biggest conviction for this year, uh, based on um, the value I'm getting on the stock. And and also you can hear from multiple big name investors that they've been into the Alibaba stock, and I believe it's real cheap when it comes to the price to value. So since I believe in this a lot, uh, this is almost 9.85% of my holding, and I'm not a huge loss right now. You can see that I'm about $2,000 down compared to the time I invested. So, but I have a strong feeling that this year uh, the Alibaba is gonna uh, go up in value again. Um, and that's because I believe the regulations by the Chinese government is also uh, working with these companies. I would like to believe that they would work with these companies um, to have a good and safe regulation as well as make these companies and let them be profitable. I believe that's gonna be good for both China and these companies. So, so talking about China, I also have another investment in Chinese stocks, which is going to be the Tencent. So Tencent again, have a strong conviction in this. Got like about 4.6% of my portfolio in it, and I'm in red by little, like about 1.4%. But I think this is another stock that's gonna really grow this year with all the regulations that's been affecting the stock last year. I believe that it's gonna be much more controlled and friendly to these companies in the coming year. And Tencent, I would like to consider this stock as a growth stock, even though it's in the value territory now. Uh, the reason being, it's a tech giant, uh, just like Google in the US. Right? So these are like big tech companies in China that has multiple platforms and a huge network effect with all the platforms they own. And then I got a lot of investments in banking sectors. As you can see, I got some Wells Fargo, Citi Group, and Bank of America. So these stocks I've been holding on to them for a long time, and there's a good amount of dividend appreciation from all of them. The only stock that got affected during COVID in terms of dividend distribution is Wells Fargo. They had to cut their dividend by a huge margin, uh, but it's coming back. They're not back to the level they were before COVID, but I'm thinking they'll soon go there, um, especially if the regulation, um, the cap, if the cap is removed for Wells Fargo soon, I think the stock will go much more higher, and not to mention the dividends as well. And then I got a little investments in Starbucks, and this is one of my good gainers. It's given me about 57%, and I think I've been holding on to this for the last 2 years. And I plan on holding. As you can see, I'm doing a drug investment on Starbucks. So every dividend we get, I put back into the stock. And then Cisco is one of my stable investments. I've been doing like I said, when I started investing, I was purely focused on dividend stocks. So majority of my holdings were in Cisco and Coca-Cola, such stocks, and I've, I've sold Coca-Cola, but Cisco I have cut my stake into half, and sold the half and kept the rest. And it's been good. I think got about 26% in gain in price, and Cisco is pretty consistent with their dividends, so it's been growing every year. So you can see that see the dividend track record. So when I started with the little I had, my dividend was around 17, and it started going up to $31. And I think at this point I was owning uh, 85 shares of Cisco, and then I sold a lot. I think about 50 stock. I mean 50 shares, and the current dividend for uh, the last dividend was about 12.95 for 35 shares I held at the time, but currently I'm only holding about 22 stocks share. And then my latest conviction, it's before we go there, it's really hard to find value stock right now in the US stock market. But in spite of the difficulty, I believe the two stocks that's in the value territory is the Vici Properties. It's a real estate REIT, and then Ali Financial, which is an online banking business. So these two are uh, value in the sense they also increase their dividend year after year, as well as they are cheap compared to the overall market. So I've started investing into these two stocks very little, as you can see, and my plan is to dollar cost average from here on. I hope this was helpful to you guys, and this is my first attempt in sharing my portfolio. And please let me know if there is any feedback that you'd like to give. Uh, I would like to always improve based on feedbacks, and I would also like to learn from this investment community and know what I can do better to improve my gains. Thank you so much. If you like the video, please subscribe and let me know if there is anything else that I can share to make your time go. Thank you.